Hey everyone, John Henry here, Slingshot Futures Trading Group. Today we're going to be taking a look at a outlook, but this time around on the gold futures, based on one of the comments that we got on our last video. Alex Jakobsen, thank you for the request. We'll definitely take a look at the gold futures for you. So, one of the things, obviously, when the markets are going crazy, are that people are looking for shelter markets. And what better shelter market that do people know of than gold, right? Gold and silver, the old adage. So that's why we're seeing gold spiking so aggressively. The market is obviously under, well, the whole world is under a little bit of kind of concern as far as what's going on. And everybody's trying to find a safe haven for their money, is really what's happening. And that's driving an insane amount of demand to the upside for gold, as we can see on the O-zone here for the daily. A couple things that do stand out on this rally to the upside. Obviously, the big 2,000 level has been broken. That is a huge zone at 2,000. But along with that, we also have several measured legs to the upside. We've got the first measured drive up, meeting this one here, which has already been equaled out. We have a shorter term measured leg, which still has a little bit to go up towards those 2125s, but that's kind of the objective where we are right now, is still grinding our way up. The market is in a very tight bullish channel, and when it's in that type of situation, usually buyers are looking to buy low. Nobody really wants to buy high, and that usually means that it feels a bit more grindy, but can be pretty whipsawy instead, meaning big moves, although not achieving a whole lot by the end of the day. So looking at the upswing on gold from a measured move perspective, it looks like there's still a little bit to go before they start completing many objectives. If the buyers do want to come in on maybe another dip, coming back in around that 2,000 area is a very obvious zone of interest. Sellers will have taken profit there, as well, buyers as sellers. And then we also have buyers who are looking for a breakout pullback of a big round number like 2,000. So it's a definite zone of interest if we can start pulling back. Now, looking on the gold side of things, from the cliff, rather, from a 60-minute perspective, we can see the market's just sort of grinding its way a little bit more as a spike and channel. We have the rally up, spike and channel higher, and now we're breaking back down. And when we see a spike and channel, the anticipated location that it breaks down to is the beginning point of that channel, which has been defended so far. But now we've got this big rally up and a failure. That could spell a little bit of trouble, considering that we just had a strong bullish move, a consolidation, and break down. Because where did that bounce off of? Previous support, now resistance. So if the sellers do start taking this back, there's a chance that buyers will give up, and we start seeing prices trend back down towards that 2,000 area where we last saw interest, actually sub 2,000 into the 1990s. So right now, buyers are really looking for this not to break down. They don't want it to break down. Stay up here and they will be happy. But, I mean, this is not looking very good for the buyers at the moment. Might see a little bit more of a dip here. Going into the hill, in terms of volume, this really kind of gives us a clean picture as to what happened. The buyers basically, well, I mean, if we look at the overall movement, they look like they were trying to trap the low and go flying all the way back up to the highs. So buyers will have bought that thinking that it was, I mean, they're spending the money before they've even made it yet. Easy peasy. Well, whenever you say easy to the market, it says no, and it collapsed all the way back down. So when we have that type of situation, buyers are looking for a way to get in. If they bought here, they might be buying below the lows, or maybe they're just simply waiting for a low to be formed and then buy it again. And what they're looking to do in that situation is exit at around break even. Well, break even is right there. We just hovered up above break even, and you know how it goes, right? It comes back to break even. They're like, yes, all right, move the stop up, and let's see if we can make something out of this trade, even though we had to sit through all of it. And it starts backing up and starts tagging all of those stops, and then it really starts pushing through the rest of them, and you get that slide off it, which ends up being a V-top. We can also see that with the volume just showing that there's not really a whole lot of interest, and if anything, kind of diverging volume up here while the market was rallying up. So obviously sellers are making an attempt, and it's not looking like the greatest thing in the world with this most recent pump higher failing. Zooming out to a 1-minute chart and taking a look more at a structural perspective, the market's still super range bound. If I were looking to trade this, as a day trader, we're looking at support on the bottom. From a scalper's perspective, we've got resistance on the highs. We just broke in, breakout pullback, we're back. Now we're coming back down again. So this is this area where you'll kind of look at it like that big spike up didn't even happen. We've just got the range. And the market tried breaking out, it saw no value up there, and now we're right back in the same range again. We could be stuck here for another week. Well, I mean, this is a 1 minute chart, but we could be stuck here for the rest of the day at least, where it's just not going anywhere. If we can start getting a breakout out of this, though, chances are we're not going to see those buyers want to hang out much longer if we start cracking below that 2034 to 2030 area. And if they get some real good friction underneath 26, then there's a chance that we see this slide off to those 2000s. So that's going to be the outlook on the gold futures. A little bit of a different market. I don't spend a whole lot of time looking at it, but definitely something we can do. If you ever have a market you want me to take a look at for you, just drop it in the comments, and we'll take a look at it. But that's the outlook for it. Hopefully you find it useful, interesting, entertaining. But otherwise, we'll see you in the next one, all right? Have a good one. We'll see y'all later. Thanks.